Hello, everyone. It is May 12th. It's Thursday. Let's go right into where interest rates are today because this is the Mortgage Brothers Show. We do this Monday through Friday. Where are interest rates? How are they affecting payments? Your housing questions that you have, whether you're a home buyer, a home seller, or a real estate agent, be sure to subscribe. A quick disclaimer, this is for informational purposes only. This is not financial advice. So getting right into where interest rates are today. The 30-year fixed conventional loan, we see them lower than yesterday. They've dropped a bit here at a 4.875, which is good news. The 15-year fix also dropped to 4.125. 5-year adjustable rate mortgage at 4.49. 30-year fix FHA at 4.625. The 30-year fix VA loan at 4.625. And here are the loan assumptions below. All right, big picture. If we just zoom out here, you will see since 1971, the 30-year fixed rates peaked. It's always just great to see. I can't believe it. 18.3% back in 1981. And then in 1986, they started getting into this channel. Kind of locked, the ricocheting off the bottom and tops. And then just in March 2022, it busted up out of that channel. And there's a couple things going on here. But if you do follow the channel and follow us here, we're going to be answering these questions. Like, why will it go back and down on this channel? I do believe it will. It will take some time. So, but I will explain that in other episodes. Also, what is causing this downward pressure? Well, that's every single time we went into wars, anytime we had any kind of financial crisis, recession, COVID, the printing of money caused these lower rates. It's a big catalyst there. Okay, so what I'm going to show you right now, and I like to look at this, it's always kind of fascinating, is we're going to look at where today's payments, if we look at the interest rate today versus last month versus last year, and then compare those to next year, what I think interest rates, or what home prices might be, interest rates and payments. So in the past 12 months, home prices have gone up 26.5%. Now that's actually in Maricopa County, where we do most of our business in Arizona. 26.5%. In the next 12 months, we believe the inflation that we'll see from homes will be 7%. Last year, interest rates were 3% for a 30-year fix. Last month, they were 4.625. Today, they're 4.875. And then you'll see these assumptions down here. All right, so last year, okay, let's just look at today. Today, the median home price in Maricopa County is about $494,000. Last year, that same house was $391,000, and the interest rate was 3%. That makes the total payment $1,666 last year. Today, for that same home, it's $2,442. Last month, it was $2,346. Okay, so just if you follow me here, we have next year, if homes appreciate 7%, that same home today, which is $494,000, will be $529,000. And if interest rates are the same as today, the payment would be $2,588. Now, I do some things here. You'll notice here, if you want to pause the video here, you can see these, what the appreciation has been versus last year and so on. But I think this is also fascinating. This is my last slide for today, which is that what is the annual income needed to qualify for these loans? And these are just assuming someone has average debt with a debt ratio up to 45% of the, it just basically, let's just say you have average debt. Actually, if I go back, I'll show you. If you didn't look at your mortgage, you looked at your car payments, student loans, credit cards, things like that, and you had monthly payments of $1,000 for those items, and we had a debt ratio of 45%, this is the income you would need to qualify for the median home price. Last year, you would have only had to make $70,000 to qualify for the home, and this is the mortgage. Okay. The last month, you would have had to make about $88,700. Today, you'd have to make about $91,000. Next year, you'll have to make about $95,000. just kind of fascinating to see where that's been now. Now, if you look at here at the income has gone up in Maricopa County, which is very similar to the country, but it's probably a little higher than the national average here, but 7.5% is the increase in income. So, for example, if someone is making this income today, they would have been making $84,000 last year. So if they're making $91,000 now, they were making $84,000 last year. Again, we're going to continue to watch the market, continue to check up on interest rates, and keep you posted. So be sure to continue to watch and subscribe. Take care, everybody. Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.